What's up everybody, Tom here with another video. In today's video, we're talking about everything to do with the markets across the world right now, including the S&P 500, Nasdaq, crypto markets like Bitcoin, US oil, gold, Tesla, Amazon, and more. We've had a rebound from the Friday lows, and it looks a lot more positive in the market. But what's happening here is we're seeing the large stocks running up and the small stocks not running yet. Will it be their turn within the next couple of trading days? We'll try to answer that and more in today's video. Plenty of stuff to cover. This one should be a good one. See you soon, guys. Okay, everybody, and welcome back to the market recap for the markets closed 29th of November 2021. And when we take a look at a heat map here of the S&P 500, you'll notice the movement into technology, into big tech. It's clearly green across all these companies, and many others weren't moving. Financials, healthcare was down a little bit. And as this news unfolds, we're going to get a movement across everything. This has happened a few times before where we've seen big tech lead, and then we've had the other sectors start to pick up as more information unfolds and the market recovers. So the Nasdaq was up 2.33%, phenomenal move. We did suspect that it would bounce immediately after such a large sell-off day on Friday, especially because of the news and the information that's unfolding, which overall looks to be more of a positive than a negative. And it could be a really big positive for some sectors moving forward as well as we get more information. So if you're interested in finding out more about that as it unfolds, remember to subscribe and smash that like button, guys. It does help us out. S&P 500, 1.32%, Dow Jones, 0.68%. And then of course we've got IWM. It was moving well through the middle of the session and then sold off into the close of the day, which is not ideal, but we'll be taking a look at that from a technical standpoint very soon. So the Russell 2000, a little bit disappointing at this stage. Let's move over to the sectors themselves. Technology, no surprise, 2.5%, the best sector of the day. XLY, 1.55%, XLU, 1.48%, and then we move all the way down here. We've got XLV, the financials, the consumer, staples, and the industrials not moving. And this caused the Dow to be a little bit more disappointing than I guess some of the other markets were. When we talk about VIX, we suspected this thing would drop immediately. This is the nature of the VIX trade. This is the fear index for anyone that doesn't know. Basically, it's based on options and it's based on this volatility or, scaredness of the market. Whenever you have an unknown, it tends to spike and then it often drops straight back down. You can always tell by the left-hand side. We always say, look at the left-hand side to understand the charts. And we love buying down here for the VIX. But this is clearly a pretty big sell sign. I'm sure a few of you guys would have been looking at getting rid of it there. It might drop back down. It's still very high. It's above 20, which means anything can happen. But it does look like these markets are recovering, and they could recover in a big way after Thanksgiving into what we call the Santa rally or the Christmas rally. Don't forget about it. It is still a thing, and we'll be covering it on this channel as much as possible. Check out DXY. So here is the DXY. We have the sell-off that was really caused more because the market's really factoring in two interest rate rises. We've spoken about this before. 2021 was the year discussing inflation. 2022 is probably going to be the year discussing interest rates. And if you have a Bloomberg terminal, you'll be able to actually see the interest rates that they were putting involved for the 2022 year was 2 interest rate hikes. Now it was getting towards pricing in 3 interest rate hikes. And some people don't know, but that's part of the reason why this DXY, the US dollar, was moving up so much. So when you have something that's going to shake the economies happen, what happens? The dollar index pulls back because it becomes less likely that the Fed will raise the rates as many times, and therefore it won't strengthen the US dollar as much. So that's part of the reason this whole thing's happening. If you want to ignore all of that though, remember you can do so because you can follow the price action, follow the psychology of the market, and in some ways ignore the news unless you're getting under key levels. Like we discussed on the weekend video, it's no time to panic when you're above certain moving averages and above certain zones, and we'll look at those soon. So DXY down a little bit, did recover. It's moving and kind of hovering around this zone. We suspected it would anyway. We do need to remember it hit near our 97. That was our take profit zone. It rallied huge. Now we hope it goes into consolidation or weakness for a little while to allow some of the other trades to come through. And speaking of other trades, gold. Good old gold, hey? So here we have gold. We have a very nice trend line. We've obviously talked a lot about this red zone here and the way it fell through it, the falling knife. One of the things that I hope many traders out there are starting to realize, that scaling is the principle. And I've got asked a lot of this in questions, and I think I'll answer it with IWM today, because a lot of people are saying, Tom, you talk about scaling, what does it mean? We'll answer that a little bit later on in the video. So you've had two falling knife levels. These are both great zones, and if you spotted these zones and you accidentally bought these levels and everything like that, you can't be sad at yourself, because you have picked great areas, but you need to just learn that final step of being patient and then scaling into the concept. So let's talk about gold right now. It's looking kind of, you would say, almost a little bit crappy on the daily here. We have long leg doji, guys, which is the low, the high, the open and the close at the same zone. This shows indecision. And whenever you see indecision at a key level of support or resistance, you should be really happy with yourself, because you've spotted exactly what the market's telling you. Then you've got a bit of a rejection. You've got a huge rejection that happened on the Friday, and a little bit of weakness on the Monday as well, due to the US dollar actually strengthening and then weakening later. But it becomes a story of, okay, let's now go and have a look at the 2 hour, the 4 hour. How is the market interacting with this zone? And when we start to go into the smaller timeframes, you'll notice there's been a bit of buying off this level. Nice wicks, little bit of wicks here, and there is some strength coming in, but this is not enough. Is this a good zone? It's a zone of interest. What we now look for is an accumulation base with hopefully some signs of breakout. So this 1810, 1811 area becomes so important. We mentioned that on the weekend video. This zone we need broken. If you're a gold bull, you really want to see it up here. If it does breach to the downside, still, if you're a gold bull, you hope it quickly reverses, and effectively that was a fake out. We want a fake out or a stop hunt. But in general, this is where gold should move up. And a lot of the reason that we're looking for this is, of course, seasonality. You don't want to get lost in the seasonality concept, though. So we know that we're about to enter December. It's very close now. December has been strong, multi-year growth for gold. That's the seasonality. Let the TA decide it, though. The technical analysis will show us the way. It will be the stronger principal thing. Seasonality is one thing. It's cool to bring it together, but don't let that ever jade your overall concept of what is going on. It just gives you confidence. Think of it as it gives you confidence to hold the position better if you believe in the seasonality and you've got the technical analysis coming across with it. Now, we've been pretty good here together. Everyone in the community has been really great at spotting, of course, oil trades. And oil has been a phenomenal technical trade for a while. It dropped hard on Friday, and I mean hard. It went straight through the 20 moving average on the weekly into the 50. Previous resistance zones become like a discussion point here. We've got this green area that we're looking for the turnaround. And let's have a look at the smaller timeframes now. Let's go down to the 2 hour and get a bit of an idea about what oil is doing. So we have the trough, we have the peak or the kind of big drop off that happened here. We've got a pickup, we've got a movement down, and then we hopefully get another pickup through and break to a new high. Really, oil traders need this bad, because at that point you're starting to say, okay, here's the lightning bolt, the recovery is beginning, people will start to scale in. And one thing about scaling, you're rewarding the trade as it goes into your direction. Think about it that way. How many trades have you placed? And I want to know this in the comment section below. Put your hand up. I'll put my hand up. I've done this. Where you press the buy button, and I'm sure we've all done it, and a few seconds later, it's all the way down, hits our stop loss, and we're like, oh, what was I doing? Why did I do that? If you practice scaling, you reward the trade as it comes through, as it does the right things. And that's the great thing about technical analysis. Once you start to learn it really well, as it breaks above moving averages, as it moves through a resistance or a trend line or any of those things, we've got some good examples in today's video, you really see and you spot that important point where you go, okay, yes, this has now done the right thing. So for an example here on oil, you might be really waiting for it to get back above 75 to give yourself further confirmation. That's pretty far away from a percentage point. So sometimes it's not like that, but this is one of the things that you'll look for. Let's move now into the stock discussion though. Tesla was up. We suspected it would rally. It rallied a little bit better than I thought it would. 5% on the day. Phenomenal rally. Very nice. And it moved to a pretty good close as well. It actually got above this 1130 area. So that's fantastic. It rallied. It closed above here. And could it be setting up for further rallies back into this 1200 zone, this next resistance? A lot of people will be pretty fascinated to see how this thing trades through the Tuesday. And the price action was overall pretty okay. If you actually go to a 4 hour, what you'll see here is this is a high, this is a low, and then of course the open and the close is technically the same. So what happens when you breach past this level? You start a bit of momentum flow through, hopefully. And that might also go with our Nasdaq discussions very, very soon. So Tesla slightly above the previous high close, and it won't show on here in the 4 hour because of the 4 hours between, but just think about what that price action is telling you. Yeah, very, very nice here. I don't mind it. Hopefully it continues to move up. Amazon, slightly disappointing. It did have a rally after the Black Friday, Cyber Monday deals have finished, and of course we move towards getting the numbers and everything about that. Hopefully we get some further follow-on effect. We've got long leg doji, which is the high, the low, the indecision. Long leg doji, decision made, downside sure, but because of the news, how we knew it was a bit of a low liquidity, well, not low liquidity day, but certainly a little bit of less trade day on the Friday. We knew that this could have been possibly a false break to the downside, which it looks like it is. And we now watch this week above here. We want a 36.30 closure plus, and that should hopefully bring in some day traders, bring in the algorithms. We'll keep watching this for this week, and then we'll bring back Apple into the discussion. And Apple was up 2.19% on the session at about 160. So that's phenomenal. Now let's discuss the elephant in the room. Let's discuss IWM. So IWM does have good seasonality for that October, November, December period. All right, it does. I mean, statistically, it tends to move quite well near the end of the year. Now, it certainly did not perform well over the Friday session. It also didn't perform well on the Monday session as everyone moved into the big tech that we'll be looking at very soon. But I want to talk about where you're looking at picking up positions and how you scale. So let's think about the breakout, okay? So many people will have entered on the breakout and they'll enter positions, and their aim may be to go for the whole movement, all right? That's one type of trading style. You move for this, you extrapolate it out, you get your 250 and you say, okay, 250, 260, that's kind of what I'm looking for. Absolutely fair enough, and it's a good level. Now, when you're placing stops on this, you have to think, okay, where are my stops going to be? Possibly they're going to be underneath the last swings, which obviously one of those would have gotten hit. But more importantly, I want to talk about this, the reoccurring thing where it comes back down. So if you were in this, you're probably at some point trying to lock in profit. So even if you'd been here, you may have broken even your trade, or you may have said, look, if it comes back down here, I'm looking for that turnaround story anyway, so I can also break even my trade, etc., etc. And you may have actually been out on the initial one or taken profit. I did warn up here against this continuing to rally. And part of that reason is because it's a massive index. It's unlikely to rally 10% like that. And that's partially due to the left-hand side and how messy it's been recently. It goes on little spurts, then it comes down. Let's talk about the pullback though. So the pullback is the more interesting component because this is what most traders tend to make mistakes on. And this is where we get into this idea of, okay, so it's pulling back. We expect it to pull to this green zone. That's the conservative entry. Move up, pull back, gets into this zone. At this zone, what are we looking for? Lightning bolts, double bottom patterns, channels, accumulation bases, movements above moving averages that's respecting, and trend lines. So this is where you need to wait for that confirmation. Now, if this had broken, let's say above here, above this downward trend, which had been rejected a few times, would you have potentially scaled into this position? The answer is most likely yes. From an educational standpoint, you totally would. Of course you would get into this area at this point. But then let's think about the story, and this is where it becomes really important to read the story. We have a long leg doji, a low, a high, an open, and a close right at the correct zone. It looks very similar to gold from that aspect. Does this mean you've identified the perfect level? You have. Your big brain, well done. You really have. You've done well. It's a correct level. Now, we didn't know that this Friday shenanigans was going to happen. No one did. But what you're waiting for here is you're waiting for that closure confirmation above here. Decision made towards the bullish side, towards your seasonality, all those types of things. So this is a perfect place to scale. Now, if the trade had moved here and double bottomed and broken above, you would have, of course, scaled in at that portion. What you're doing is you're using your multi-time frame analysis. You're using your weekly to find your key resistance breakouts, using your daily to show you a little bit of the way, the 2 hour to show you the trend, the 1 hour to show you turnaround, the 15-minute to possibly find the lightning bolts. It's not easy, but this will save you overall from getting in. And then at that point, what you do is you basically say, okay, am I investing or am I trading? You might say, I like my green zone. I buy a third of my position. I wait for it to close above here. I buy another third of the position. As it breaks through the trend line, I buy my final third of the position. By doing this, you would only be in a portion of it. Now, I won't go into it any further because, of course, today we're covering off the market, but I hope that does help. So when we go back down to where we are right now, which is hovering in a absolutely annoying area, well, hopefully we fill the gap. I mean, it's highly statistically likely we will fill the gap, and I hope we do. But let's think about the 1 hour time frame here. What's going on? Let's think about the 15-minute time frame. As we break down, are we seeing any signs of positive action here? Well, I think we're seeing one zone of positivity that could happen, and that's going to be that 226. So we have a series of higher lows. That's good news. Thank goodness we have higher lows. We hope that this actually rallies on the open, which it should. Let's hope it does. Again, movement to smaller caps would be something that we're looking for here, and we do hope it does that. But for many people and many algorithms, this will be one of the key zones, this 226. The market's showing us that it's rejected once, it's rejected twice, it's rejected basically 3 times. And as we close through here, what happens? Participation into filling that gap. And that's one of the things that you look for. So buying the falling knife is fine if you're an investor. But when you're a trader, you need that momentum follow through. So remember, investing and trading are separate. If you just buy this zone and you're an investor, I don't blame you. It's a pretty good zone. It probably will come through. You don't really necessarily have a stop loss. You've got a longer term approach, all of those things. But if you're trading, you need to wait for those confirmations. And hopefully that makes some sense. We go into it more in our mentoring groups. We really cover off on this idea and many, many more things. And if you're interested in that, you can check it out at fxevolution.com. But otherwise, that's a bit of a rundown on some of the ways that I approach the market. Let's have a look at the Nasdaq now. Move over to this 16,400. Okay, that's a nice rebound here. Now, we still have this ascending channel we've used for a long time on the markets. We've been talking a little bit about whether we move over to a logarithmic or regular. I'm not really too sure which one's the best here. I usually just use regular on the stock market, but I think logarithmic might be worthwhile on the crypto markets as well if you want to do that. So definitely something to consider. Those faster moving crypto markets, logarithmic does tend to be the better option. Let's move down here to the 4 hour. Let's think about this. Okay, cool. Bit of a rebound. 2 hour. All right. We're starting to see a little bit of a pattern here. And what you'll notice is it's come up to this resistance. Now, if we go over to the QQQ, it becomes more apparent what this zone is. Here is the resistance. Here is the resistance again. And you think, fantastic. Is this an interesting point? Yes, it is. If we breach this point, we could move back up to that 408 on the QQQ, and that would be fantastic. But if we look at the US 100 futures, this is the futures market, trades all the time. Look how many times it's interacted with this area. 1, 2, 3, 4 closes right around there. And the time of this recording, it's right on that 16,420. So day traders will be watching this zone because they'll be looking for a crack, a pullback, and hopefully a pickup where they can take that. But also bears will be looking at this zone saying, you know what? It's been a great day. It's been a nice rebound. We may not be scared in the market overall with that news, but what are we going to do? Maybe we're going to sell off this zone a little bit, pull it back, scare everybody, and then hopefully get back in. I don't think this news at this stage is looking negative overall for the markets. I mean, obviously you've got stimulus, we're not going to get into that, but the price action is showing we closed at a key resistance. We moved heavily into big tech stocks. And if we breach this zone, then of course we look towards further upside, potentially even new all-time highs. If we pull back, we're looking for opportunity and turnaround stories, potential hammers inside of here, potential movement back down to the 16,120 and then rally off like we've rallied before. I don't think that one's going to happen, but it could. And we're looking for the turnaround story. So more turnaround, resistance break, continue to watch this point. We'll come back to it tomorrow, and hopefully it helps with being able to bring in your own systems and figure out what you're going to do. The S&P 500 is kind of similar. It actually smoked straight through this area, which is fantastic. That's what you want to happen if you're a bull in the markets. It then sold off a little bit after the close, and we've got here the previous support sitting around 46.43 area. We looked for it to pretty much come back down here, create a new peak, ideally 46.75, and move forward. This we always knew was going to be a situational news event. We know how to deal with the pandemic. We know that governments like locking down, all of these types of things. They have ramifications to the economy and therefore ramifications to our stocks. But as the situation unfolds, it was always going to be a sharp reaction either way. And it looks like at this stage, the reaction could be towards the positive. We need to keep in line the price action. And remember, when you're talking about crashes, corrections, all these types of things, you've got to look at the previous history of the market. And what you've got to say to yourself is, should I be concerned at this market right now? The market has bounced 20 moving average, 20 moving average, 20 moving average, weekly, 20 moving average. If it closed underneath the 20, we expect it to move towards the 50. That's when you're starting to see a real problem in the economy. Before that time, and before the market gets underneath this zone, in general, we are not worried. Why would we be worried? The price action is showing us generalized strength. We're going into a good seasonal event, being the Christmas rally, though some people obviously bring stats into that and say, oh, it's not as good as it's been. Look, I've seen quite a few good Christmas rallies. Obviously, 18 was horrendous due to the massive trade kind of disputes that were going on. But most times, it's pretty consistent. And then we get that nice January kind of run. And then near the end of January, near February, March, okay, cool, question marks come out. That's when we start to say, whoa, pump the brakes. How much have we moved? Where are we at? There are some things we do know. The trend line is a beast on the S&P 500. Look at this thing. It's a phenomenal beast. It has smoked the market each and every time it's come up to this zone. We know this has been resistance. We speak about it all the time. We've hit the 20. We almost hit a 50. And look, we might even go into some sideways kind of trade here where sectors become the best picks. But in general, I'm pretty optimistic on the markets. And I hope most people realize that being optimistic is still the key when the price action is showing us that way. It's a long video today, but there's a lot to discuss. Let's move over to Bitcoin. So Bitcoin has certainly rallied, and this is looking heaps better. I mean heaps better. So we've talked about that kind of A equals B equals C. Now you may wonder why it's like this. I've got it on logarithmic at the moment, so that's why it's changing it. Remember, if we change it to regular, it'll be a bit better for our A, B, C movement. We've got that pullback that's very similar in length, which is fantastic. So we've got that similar length here. We'll move it back over to logarithmic here. This is exactly what we were hoping for. The market came down. Now with Bitcoin, you've got to either select zones for investment, which is that 50, 52.5 to 55, our green patch here. Or you've got to make a decision, okay, how many technical reasons can we bring together? And if you'd used a logarithmic chart, obviously you would have had your trend line looking like this. And I'll show you the difference. So here's the trend line looking like this. And if you go to regular, see how it doesn't look like that? And if I actually try to draw between it, let me do that now. It actually shows it around the previous horizontal. So for a fast moving market, possibly it might be worth using the logarithmic here, and you would have hit that trend line. But regardless of that, we use horizontals mostly on the channel. So let's think about the horizontal story. Well, we have here a nice base, a false break to the downside, followed by a big rally. That's a good sign for traders that are on the smaller time frames, and then effectively an accumulation double bottom at that area. That's a good base, a good start. Now, we still think 60K is really important. 61.5 is also a thing, but 60K in general, resistance. This is the area that if the market's going to break through will become super important. And this is where a little bit of dangers happen sometimes with drawing your trends. You can curve fit. So one thing that I even did was I drew the little bit like this. Did the market respect this zone? Yes, it did. But if you go straight to the peak, see how the trend line here comes through again and you're saying, oh, well, it's still there. This is the problem a little bit with trend lines and why we try to tend to stick to our horizontals as much as possible. I love the Bitcoin move here. I think the Bitcoin hopefully has bottomed. It makes sense to the seasonality. It makes sense to the discussion, and we hope to see it continue up. Support, resistance. You know, it's all over here. 60K, a huge zone coming up hopefully in the next 24 hours. And if Bitcoin rallies through that, that'll be a big deal. Another thing that people are looking at is ETH BTC. We bought this up a little while ago on the channel. We talked about the ratios. Ratios are a huge deal. We talked about how Ethereum was stronger than Bitcoin. It just suddenly busted a big zone for us. And when it busted this big zone, here it is. This is when we talked about it over here. It became Ethereum was the better overall conceptual investment than Bitcoin. And it has been. Look at the Ethereum. Look at it go. To the 0.08 it is going right now. And if it breaches 0.08, it brings up a next point. Where do we think Ethereum goes after that point from there? So we can go back to 1718 and we'll notice 0.1, 0.11. These ratios become a bit of a thing. So this is a series of higher lows. We're going to hit a resistance. We expect some weakness there, but if it busts through, Ethereum may go on a bit of a run. So I like Bitcoin. I like Ethereum. I like plenty of coins. I've made it pretty apparent that I like network coins as much as possible. It keeps the FOMO and keeps people always discussing all of the news coming out, but I like what we're seeing there. BTC shorts also dropping a little bit here, another positive sign. So all of this is leading into hopefully some positive period here for Bitcoin, some good TA. I like seeing good TA, that's great. Let's talk about news. Now we do have some news coming out this week. We've of course got non-farm payrolls on Friday, and this is all ET time. So let's have a look at that. 8:30 a.m. New York time, we will have the non-farm employment change. A fairly important statistic. It's arguably, well, not even probably arguably, the most important news of the month. The US will be looking for a strong number out of here, but not too strong. We like it. We like it around where everyone feels like it should be. And this will begin the discussion, I believe, around interest rates as well. So 2022, unfortunately, is going to be like interest rate this, interest rate that. This year was 2021 was inflation. Remember, they are partially in control of this situation. So when it's in control, it's good. When it's like an Evergrande situation or even that black swan kind of event, such as the pandemic, other things, those types of events you've got to pay a lot of attention to. So think about, are we in control? When the barge got stuck in the Suez Canal and oil moved, I mean, that's going to be a temporary movement. Everyone knows that. But you've got to be able to cut through it, cut through the media and move to that one. It's a massive video today. I know it's long. I hope you've got some value out of it. If you have, please remember to subscribe, smash that like button, guys. And thanks also for the birthday wishes. Yes, it's my birthday, 30th of November. So thanks so much. I know in the US, it's probably still the 29th, but thank you very much for everybody. Have a great day. It's awesome to be out there, and I'm glad that we've had some recovery, and I really hope that it's making you guys feel a little bit better. See ya for now. Bye.